Let's talk about inflation and operating costs for a little bit. Let's start with inflation. Since inflation is a big part of the headwinds affecting the real estate market, but it's not the current inflation, but it's the inflation impact from 2022 through the last quarter of 2024 that is affecting our current real estate market. This lingering inflation from the previous governmental economic policy is now baked into all aspects of our economy, including real estate. Some of you may not be old enough to remember this, but I remember when we came out of the 1979 and 1980 economic status from, again, another political economic set of circumstances that drove interest rates on mortgages between 14 and 18%, and it increased inflation into all aspects of the economy, how difficult it was because how much more expensive things were. Well, that lingered for about 2 years into the next political economic set of ideas that were transforming it. And that's where I think we are right now. We have baked in interest, our inflation, that we're having to deal with. But there is some good news. And that is since June of this year, inflation has dropped at or near the Fed target rate. And household incomes have risen. But I'll talk a little bit more on this later. Due to legacy inflation, rents have risen significantly along with everything else. This makes cash flow tighter on investing on properties, and particularly for properties, that are bought on margin. Rents may be up, but we got fewer people trying to rent those homes. I mean, the rental market's still pretty decent, but the prices are up, the interests are up, and when you combine those together, it creating very thin margins on a lot of acquisitions that are being financed and leveraged.